Good morning and welcome to the early bird. And here we're looking at the Dow Jones here on a 30-minute chart, and once again some wild price action through here. This is the European price action through here, and this move back up through here was China coming in to help Europe in the bailout situation. So yeah, some pretty wild sort of action there. However, what we sort of can glean from this situation is that this price action here appears to be bullish corrective. So there's a reasonable chance that new highs will be made through here. However, in the short term here, in this little push up through here, approaching these old highs up through here, we should see some sort of sell-off now that they've had that news being soaked up through here. So looking at this little price action through here, on the sort of 2-minute chart is this structure through here, and would be looking for 5 waves in there. So we would see something like up for one, little ABC, back for the A, B, and C here for wave 2, and then the third wave would be in through here, maybe to here to here, a fourth and a fifth coming up through here. So the fifth would be the third here, the A, B, C for the fourth, then up for 1, back for 2, up for 3, back for 4, and up for 5 in here. So we should see a top into the 900 here, which would be sort of very close to that previous high that we were looking at before. That would give us the other high that we had the other day was 11,940. So that gives us a double top. So that double top should be breached, really. That's again, the man would say that double tops are never the end of a bull campaign. So we'll probably see that be taken out. And we are seeing support coming in for gold, as you've seen the other day, and the other base metals are not far behind them either in their own little way, and oil as well. Yeah, so short-term sort of highs coming in through here. And Thursday's got the habit of being a bit of a bear day. It starts off with the appearance of being bullish, but can sort of gap open on that and then trade down for the day. So just watch the Dow and the S&P 500. The S&P 500 is not as perky as the Dow, and it's still in this mode here. But we have to treat it as corrective through here for the time being, even though that we can have 5 waves down to this point, an A, a B, and a C through here, and this 5 waves can be the C wave and the end of it, and we can roll over from here. So realistically, we can expect if you're going to go along in this market here, you'd either want the 1250, the midpoint, to be support. You don't want to buy it before that because it's only going to correct through here anyway. Or and as we talked about yesterday, the support area down here, the 1220 in subgroup 1, 10, 20, and 30, if that gets breached here on the low side, then we've got a deeper correction here, and then that would create the top that we were looking for in here. And that's the same on the Dow Jones. If I just go back here a second on the Dow here, as long as, if this is up for wave 1, to this point here rather, back to wave 2 here, and we've got to move up through here. If this market comes back down and takes out that high there, that's the top of wave 1 there, then really we've got some problems coming in there. Then we can allow for 5 waves up at a 60, 70, 80% retracement level. But look, if it comes down and finds this level here, the 11,772 as the resistance, gets stuck under here, then a bearish picture emerges, and certainly under the 11,720 there, it would emerge from that side there as well. So yeah, just sort of be aware of that. But coming into our local markets, just get here, might just come back to this one in a moment. Just trying to find another one here. Not even that one there. We're still at the resistance here on the daily here, and we fully understand that the 4-3 is a resistance and the trend line and all those sort of things there. But there is a bit of a chance for this to push up through there and I just need to find that chart there to show you the picture of that there. Just bear with me while I test a few things out here. That's one, but that's not the one I'm looking for. This one here is a bit better. Okay, because the reason I wanted to show you this one here, it's a 2-hour chart, and a couple of things here is that well, we can see that the 4-2 here is the support, and if this market dropped under this support here again after having these lower highs here, then you would just naturally think that there's weakness in the market, wouldn't you? And would be sort of short from there. And we have been sort of, anticipating to be short through here. But we've got this more of a bullish pattern happening at the moment now with support here. We've got this 3-wave structure through here as a and when you've got a move coming up and you've got 3 waves this way, it's a bullish corrective pattern through here, and we were looking for 5 waves to take this high out through here. So we've got 5 waves up through here, and we've got this sort of corrective move back through here. So now we're looking for this high to be taken out, which is a possibility. It may not. It may get more messy within here in terms that this can be an A wave, a B wave, and a C wave into here, and then move up from there. So it's a little bit tricky, but we'll talk about that in a moment. But just generally looking across here, you can see that we've got this 3-wave price action here. So then we've got this impulse wave here. So we're getting 3 waves to the downside and 5 waves to the upside. So we'll see how we go there with that. But this is the key thing here. So yeah, under 4200 would be bearish, and the subgroup 2 area here, the 4172, would be the trigger to go south. And up here we got the resistance of subgroup 2 up here with the 4272 here, which is the sort of timing aspect of this here. So just coming back to that a little bit in here, if we were looking at a bullish picture at this stage here on this 15-minute chart here, then we would want to find support in here somewhere, and this is the 42 here. So we'd be looking at 10, 20, and 30 is group 1. So we really want the 42, a breach of the 42.20 here would create a bearish picture through here. So just be aware of that. In terms of trading, we were looking for 5 waves going up through here, and as long as it was taking that out there on the before the close, so we can have that 5 waves in there. I'll just open that up a little bit. It's probably the top of the 3rd. Oh no, it could be the 3rd in there, and the 4th and the 5th there. Yes, that could be the 5th. So we'd be looking for an A and a B and a C correction coming back, but we want it to sit on the, if it comes back into the 42.20 here, that's fine, but you wouldn't trade it until it came back up here and found support on the 42.30 there. So just keep an eye on this here. This is what you want as a retested support. If that's not the case and it finds support on top of the 42.50 here when the cash opens, then you would go from that point there. But you know that you're going to have trouble at this 42.72 there. So you'd want to be taking some profit in the 65 and being out at the 72, and then waiting for that to become support at that side there. Another thing on the Dow Jones is this US dollar chart here. While this is 76.50 here, okay, so while the dollar is under the 76.50, then the Dow can be strong. Once this becomes up here, and if this comes up here and finds support on top of the 76.50, then the Dow is weak at that stage, and would be weaker if it took out this 72, this group 2 here, and this became support here. So using the US dollar here in line with the indices is a really good flip side to consider this here, because we are getting resistance on the flip side of the dollar here too, in terms of the euro, but we'll get there in a moment. looking at looking at the metals, we're looking at gold here, and we can see that in this trend through here that this is the strong part in the middle here, so it's obviously the third wave through here. We'd be looking for this to be wave one up to this point here, little ABC for the two here, bit small, but there you go. That's what the levels do, because the psychology of price, the stronger the number, the more it can skew the actual pattern. And yeah, so look, up for one, back for two, the third wave going up through here, little fourth and little fifth here. So that's a little bit small for the sort of fourth wave through here, but we'll just run with that. That third wave there could be that one there. I just haven't seen inside of this structure here just yet, but what we could expect here is a larger correction into the 17 area here. Yep. If that doesn't happen, it's already occurred here, so that's sort of fine. But if we found support on top of the 72 there, then you can get your first position long. And if it finds support on top of the 1730, then you can also go in there as well. But don't rush to go into the 1730. Make sure there'll be a push higher into the, say, 35, 38, and then a push back through here, coming back and checking the 1720 as support. There'll be some sort of pattern up here, but you want a nice retest on here before you go higher through there. So you either can work off the 72 support here, and then again adding on the 30 support here after it's had a correction, and that's the way to go if that's the case. If it's going to come back here and have a bigger, uglier fourth wave correction from into here, then just allow that to be here, because wave two was simple. We could expect wave four to be complex through here, and you'd want at least sort of 3 swings across here for that to occur. If that's the case, we'll pick it up at that stage and we'll be able to go long from that stage there. And also remember that the bigger the correction here, the better the next trend going up through there. So that's what we'd be sort of looking at there in that point there. Kind of looking at the oil as well. I've pulled this in as a fourth wave here, but that could certainly be the top in there as a fifth wave as well, and so we need to take that into consideration. But let's just chill out and wait here, because what we're looking at here is a normal price action through the level there, where the market comes up and hits the 90, the level, it's the arrival, the reaction, the support, and then this is the first high above the level, which is normally done in 5 waves. And if the market finds support on top of the 30 here, the top of group 1, then we can push up. It didn't, and we're back here, and that's fine as well. So what we could expect back here is a larger correction in terms of this either being a top in here, or an A and a B and a C wave coming across here and then moving up from there. This is an A, B, C in here at this stage here, but this will get a bounce off here, of course, meet supply and then come down. So then we'll have 5 waves down through here. And if we get that 5 waves down through here, that can also be the top or just the A wave. It could be down for wave 1 at that stage. So normally what we do with trading is that once the market comes up to a level, we get out, and then we just wait and allow for the pattern to unfold across a level. And if it does some sort of A, B, and C here, and then find support on it, well, then we'll be long from that point. We don't get involved in what's going on through here unless you're scalping through here. Let's have a look at silver. Yeah, silver's still in that in that wave as well, but you can see it's struggling through here, and it's going through this well, depending if you're trading minis or the full contracts here, but this is the top of group 1 here, and you're seeing what's occurring here. So you're seeing the weakness come in here, so we'll see more corrective pattern come in through here, but eventually after that's done and dusted, we'll see if we'll get support on there. But it's the copper that we're more interested in. I've gone over this wave count through here in a little bit more sort of detail. I don't know if this is wave 1 to here or this is all wave 1 to here, and it does cause a little bit of a difference in terms of that, because if that's just wave 1 here rather than having this wave 1 here, then that would be the wave 5 here. But what we've got at the top here now, we've got This is all the normal stuff happening at a level, just like we are talking about in oil just then. We get the arrival, the reaction, and then we get the 5 waves. It's normally the 5th wave that creates the first high above the level, and then you get your ABC correction after that. But this could also be a 5th wave up here as well. We can see that bit difficult to see, but we can see that long strong wave in the middle there, so that would either be down for wave 1 or the A wave here, and this would be wave 2 or the B wave, and then we'll be coming down for the C wave or wave 3 here. So let's just give it some time here to play out through here, and let's see what we've got there. Eventually this will become the support or the resistance over here after a few swings across here, and once that does if it does become support, well then we can go along from there, and if not, well then we'll be looking for further downside there, and that will create the weakness in the Australian dollar and also in the ASX 200. We've got the RBA rate coming out on Tuesday, Melbourne Cup Day, and traders normally like to race that up before the announcement and then sell it off at 2:30 there. It's going to be a bit difficult for them to race off and do that. But we'll see how we go with that. Let's just bring up the Australian dollar here. Okay, just with the Australian dollar before we go that, we were looking at this is a 4-hour chart here by the by. Look, if this market comes below this level here, the 1.0272 there, then consider weakness in play there. There would also be weakness if it took out the 103 as well through here. If it Okay, let's just go into a smaller view now on this one here to have a little look. I just wanted to point out that 102 there because that's a slightly bigger picture there. We are looking for a top there, but this is also the 105 here as well. So it's very normal. This is the arrival, the reaction, and the support that we're looking at through here now. If this dropped down below the 103, then there'll be further weakness in that. And would have a serious top in here because there's not much that can, when the market comes up to a level, there's not much that can actually happen. It can do pretty much 3 things. It can either arrive here and never come back and just be sold off from that point. And that does happen. The next thing that it can do, it can just go straight up and shoot past it. And normally the distance it goes above the level is the distance it will come below the level. And then it will find the level as the balance point. It will swing into it like a triangle. It will sort of, if it shot up through there, then it will come back and it would sort of get lower and lower and just sort of tune into that level there. So that's the second thing that can happen. And this is the third thing that can happen and this is the thing that happens the most, is that it comes up, arrives at this here, the seller's waiting there because of the number. So it gets sold off through there, it eventually finds support, and then it creates the first high above the level. The first high above the level can be is normally the top of the trend that's moving up through there, and then the market can fail from that point. Or if we're going to continue to push up, then we'll just see the normal A, B, and C correction across that level, and then go up and find support at that point. Now, normally we would just trade to a level and get out through here, and that's what we do. If this is finding support here and it's going to create a little 5-wave structure up here, because there will be 5 waves from here to the next high through here. Okay, so we don't normally chase that. We just really allow it to unfold, and then we allow the correction to unfold. But that I would have figured that that they were going to, with the RBA rate coming up, they would be selling it off here, looking for support, and then race it up through here into the Tuesday, and then get it sold off from that point there. But with the CPI figure being at 0.6 and the sort of a rate cut if possible, it's going to be a little bit difficult for them, but it will be interesting to see if they can get away with it. So we'll see, just be aware of that and see what happens. So this correction that came down through here is a little bit deep, but it's still kind of okay. But it does also produce now a 5-wave structure to the downside if we took it from this point here. So it's a bit dodgy and a bit overlapping with the wave structures here. If we took this down for wave one here and wave two coming back, and then wave one, two, three, four, five for the third wave, back for the fourth, and down for the fifth. Now, in currencies, because of leverage, you will get the odd spike and overlapping wave structure. So you've got to kind of take that into consideration a bit. I mean, you wouldn't expect that in the Dow where high volume is, but in leverage, then you would. So we focused on this little move up through here, either being an A and a B and a C to here and failing and rolling back over through here, or we're going to see 5 waves up, 3 back, and then moving up there again further. So once again, we're going to be at the 104 area here, and let's see if we can get a closer view in on this, because this will also be a little bit like our market as well. So you can start to see the structure a little bit better here on the 4-minute chart. In one way or another, we've got wave 1 going up through here. We've got wave 2 going back. We've got another little wave 1 here, wave 2 here, or we could have the A, the B, and the C here, and then wave 1, 2, 3, 4, and 5, maybe coming up into here, but this is definitely the third wave in through here. So we've pretty much got, I would say that there is part of that there. So we've got the 1, the 2, the 3, then we've got an A and a B and a C for the fourth, and we've got a fifth going up through here. So we'll get some sort of spike up through here to complete that 5 waves. And it's the job of group 1 here, the 10, 20, and 30, to hold the price down to the closest largest number. So we should see some sort of effort made up through here, and then an A and a B and a C coming back through here. So after a messy sort of correction through here with the 72 and the subgroup 2 as support here, we'll see another push to the upside through here. So just give it a bit of time. We'll see the ASX maybe open high and trade down. So don't get trapped here. Just allow this some time here to develop. So we're looking at 5 waves up there, 61.8 retracement, 50% retracement back in some sort of 3 swings across here, and then a move up from that point there. So give it a bit of time and you should be able to get the pattern sort of worked out through there. With the euro, just bring the euro back up here. You can see that it's been damn messy from all across the top here. We know that the 140 has been really sort of pinning it down. There would be a whole lot of sellers sitting up there, no doubt. This is the meeting that they're having in Europe, and this is the Chinese coming back in here supporting the situation through here. But what we've seen here sort of on a technical level is we've seen supply here. This is really sort of pegging it in through here, and we've also seen support at the 76 in the US dollar as well. So they're both basically locking there, and we are looking for a high here in the euro, and we are looking for a low in the dollar, and we are looking for a turn to the downside in the indices as well. So we're kind of just struggling between all of this, and it hasn't been easy, but we'll sort of stay with it. And yes, we can get new highs as well across all markets. So we just need to be patient and thoughtful, and we just need to continue to work through this until we've got ourselves a trend in the market. And yes, sure, the Europeans will solve their short-term debt problem in one way or another. Obviously, it won't solve the biggest picture. Everybody's talking about that, yeah. So look on here, it does this. We've had this move down through here, which was possibly in 5 waves, and we could look at this in 3 waves going back up. But this move back up through here is really also looking like 5 waves as well, isn't it? So we could view this just giving it some, we've got time on our hand. We've got, this can be wave 1 and wave 2 back through here, and wave 3 up through here, very much like the Australian dollar and very much like the US indices as well, and the Australian SPY as well. So they're all moving together. So this 1, this 2 here, we've got wave 3 up here. This is probably wave 4 here. We'll see a wave 5 move up. The wave 5 won't move up too much because the extension was in wave 3 here. So wave 1 and wave 5 will be pretty much the same. So we'll see some sort of move up through here, and then we should see an A and a B and a C across here, and then we should see it push up and make new highs from that point there. But at this stage here, I do need to note that we've only got 3 waves up in terms of an A and a B and a C wave to that little high there. So, but once that pushes out through there, then we can have a push higher through there. Okay, just in a smaller little version through here, bit of a cleaner structure through here in terms of up for 1 here, back for 2 here, then up for 1, back for 2, and we've got third wave to here, so that 1, 2, 3, 4, 5 to here. So we've got this triangle pattern here, triangles, 5 waves diminishing into a point, and just grade on 39 here. So we should see a push a little bit higher through here. But as you know, that sure, the idea is to trade from the 139 to the top of group 1 here and exit, and then wait to see if group 1 finds support on here, and if so, then trade it up from there. But we'd be looking for this 1, 2, 3, 4, 5 up here somewhere to be a 5-wave structure, and then we should have an A and a B and a C. Not a perfect world as such, but some type of corrective pattern, and if that's the case, then we'll look for further upside there. But one of the keys is, like I mentioned as well, is the US dollar. So the 139 for the euro and this market here. So while this is under the 76.50, we can be long on the euro, we can be long on the ASX 200, we can be long on the Dow and the S&P 500. But if this comes up and finds support above here, then that would be a very clear trigger to be on the other side of the market. So even though that there can be swings across here, that's where your skill set comes in, and you need to sort of work on things a bit more. But it does give us something to work towards. Alrighty, well, that's about it. As I mentioned, while this is under here, then we've got a bit of a bullish side to the markets. The only catch-22 with that is that Thursday can be opening higher and then trading down for the day. So be careful about getting sort of trapped in there. Kind of get some sort of plan before you trade. You need game, set, and match before you all very clear before you place trades in a market. So just be aware of that and tune there. And also, if today in the afternoon, if we do have that sort of bearish day in the afternoon, then we'll be looking for lower volume on the pullback. So we'll be looking for even though the market may be moving down in the afternoon session, we'll be looking for lower volume, and we can use that to start buying into the market, because that lower volume would mean support, and that support would start to become more apparent on the Friday morning. And on the Friday morning, if volume comes in, well, then we'll be buying into that. And if we had a stronger closing in the afternoon session from 2:30 to say 3:30 with volume coming in, then that would be the momentum for the bullish day on the Monday, with profit taking on Tuesday again. Alrighty, well, good morning and good luck.